Hey traders, Raghee here, and for tonight's free video for TradeForexFutures.com, I'm going to do a quick recap of some Aussie positions that could be interesting going into tonight's 9:30 Eastern PPI. Now, members, you can take a look at today's chart archives because I have a pretty good feel for where the US dollar is going into tomorrow's NFP. So while in the near term I'm focused on this Aussie story, longer term I'm much more interested in that US dollar triple bottom and the effect the dollar is going to have on our US dollar correlated positions as well as at Euro US. Now, Euro US is not one of my favorite pairs, but it is kind of an interesting play on what could be some dollar volatility. So check that out in the members area with the archives. Also in the archives is a risk management video that I taped back on the 25th of this month, and it's a very unique way, it's a very interesting, powerful, and unique way to take advantage of transitions, much like we're seeing in the Euro Aussie. So when I'm talking about transitions, I'm talking about what we saw here in terms of what was a shallow and fairly fresh 4 to 6 and then succumbed to this sideways price action. So a lot of the lines and levels that we were watching from the perspective of the swing short become levels that we're going to look for in terms of a fade short. So I still want to stay on the short side of the market. The tricky part here is, what is the story with the Aussie? Now, we went into a pretty in-depth Google News surf. In other words, surfing the headlines, looking at the fundamental stories, swirling about the individual Aussie story, and trying to determine what it is that traders are so spooked about. And there was a lot of discussion about the Aussie US specifically, which is another open position we have, of course, which is going to be in play tonight at 9:30. But what's interesting is a lot of those headlines were crediting the Aussie US for indicating Australian dollar strength, when in reality we have a very heavy dollar. And the Aussie will be able to look a little stronger in comparison to the Aussie. So, my caveat here, and I mentioned it in the email text, is be very cautious reading a headline. And while I will acknowledge that a headline does have the power to shift psychology and obviously sometimes even affect action, the bottom line is sometimes they're absolutely incorrect. And a lot of the assumption that dollar strength, I should say Aussie dollar strength, was the driver couldn't have been more wrong. In fact, the Aussie was pretty much losing ground against everything but the Canadian dollar for most of the day, and the Canadian dollar was pretty much flat. So when you look at the Aussie from a relative strength standpoint, and you realize that it's losing ground across the board, and then you juxtapose the headlines which look at the Aussie US, the heavy US dollar, but credit that to Aussie strength. I know for a lot of you, dissecting a pair is still not something you necessarily are in the habit of doing, and if you're not, I've included a playback from the prior Forex and Focus session that I had back on the, I guess it would have been April I'm trying to remember what date it was. I think the 21st. I have that included in the email. If dissecting a pair is not something you're doing, I cannot stress enough that that's one of the first mistakes Forex traders make. They look at everything in a unit, at everything in a pair. And that's not always the best way to view your individual trades. In fact, you have to know what the driver is. And in this case, a lot of the driver for the stability, the support in the Aussie was pretty much dollar weakness, which allowed the Aussie to look stronger than it probably really was today. The PPI could shed some light on that, and because the prior trend was up, I'm going to look for that trade where it's no longer a swing buy necessarily. It's not the right market trend for that kind of approach, but it is still a buy. But now it's transitioning to a distribution fade buy. That's the Aussie US. More exposure to the Aussie comes by way of probably the pair that has, I should even say had, the best DB, the best directional bias, and that was the Aussie Loonie. The Loonie is not the weakness story that it once was, and what we have now is another opportunity to take what is no longer a swing buy environment, but I will leave those lines and levels on my chart. They may not mean the same thing they did before, but what they do offer me is the support and resistance, which is valid regardless of the setup. A lot of traders think that once they change the kind of setup, once the market trend shifts, that suddenly there's a whole bunch of new support and resistance levels. That's not necessarily true. Oftentimes, the homework you've already done by way of lines and levels on that time frame that you're trading will apply, but in a different way because of the transition. Again, we've seen another transition from a 12 to 2, which was a really nice 12 to 2 we enjoyed for a long time, now into the transition of more of a 2 to 4, where I still want to be on the long side of the trade, but where I get long is going to be a little different. And we've been discussing that throughout the morning chat, and I know a lot of you have had a lot of fun taking those distribution fades on the tail end, either adding them to existing swing buys, or you weren't in the trade at all and decided to take advantage of the very nice, very low risk, high reward ratio that a distribution fade, even though it's aggro, affords us. So again, we have the 930 hot zone. I think it's really important that we keep an eye on the Aussie in terms of the opportunities that could develop. Remember that when we go into tomorrow's non-farm payroll, we're going to be shifting now into obviously a U.S. dollar driven, or I should say U.S. economy driven type psychology, and there's been a lot of mixed feelings about what the Aussie does when the Fed either continues the course for taper or data that supports a continuation in the pace of taper arises. The Aussie hated taper. It shook that psychology with a more hawkish, or I should say less dovish, more neutral, slightly hawkish, probably neutral to hawkish RBA. That's been really the backbone of much of the shift of the Aussie, just kind of accepting the U.S. taper and being able to move higher in spite of it. But we've had a very quiet RBA. We've had wishy-washy data. And so what's happening is we're just kind of stuck. I don't want to sell Aussie, no more than I want to sell dollar, U.S. dollars. But I need some good data to keep people feeling that the RBA is going to be neutral and really start moving the needle towards hawkish. So tonight's the PPI. Tomorrow we focus on non-farm payroll. We have a number of setups that we're looking at for the U.S. dollar. I'll recap them in the premium video. I'll recap that euro impact as well as a correlation to that dollar volatility, as well as some of the yen volatility we could see on the risk environment of, again, tomorrow's non-farm payroll. All right, I'll see you in the next update.